Okay, in today's lesson we're going to talk about Forex chart patterns and how they can improve your trading. This would be lesson 19 in our 35 lesson package, learning package from forexearlywarning.com. So we're going to discuss conventional Forex chart patterns, and we're going to discuss the ones that are real and occur frequently all the time on the spot Forex. Things like flags and double tops, double bottoms, the things that you see regularly when trading the Forex market. If you want to look at a website that has some general chart patterns, you can click right there on chartpatterns.com to get a general feel about some of these chart patterns. So let's start reviewing the images now. So let's start with a bull flag pattern. And generally speaking, a bull flag pattern is you have a currency pair that's in an uptrend, it makes a move, and then it consolidates basically somewhat sideways and then continues on. Here's an example on a real chart here. This is just a sketch. So you have a bull flag pattern. The pair makes a move. The overall trend is up, and it consolidates. So you can set an audible price alert here and intercept the next movement. If this pair is like, for example, the Euro USD or the Euro Yen, something like that, when the price alert hits, you can go to our Forex Heatmap tool, our Forex Heatmap, and verify the trade entry. So, same thing on any one of 8 currencies. This is a live indicator that you can use to verify your trade entries. So you're using the chart pattern combined with the Forex Heatmap, and you're building a trading system. This is a bear flag of currency pairs consolidating dead sideways, but the trend is down. You can set an audible price alert right here, and this is a bear flag. So it starts dropping, and it goes through a pretty significant drop. Okay. Once again, you can use the chart pattern, a flag chart pattern, combined with audible price alerts in the Forex Heatmap to verify your trade entry. So a bear flag, a currency pair comes down and it consolidates in a consolidation zone. It can be kind of wide like this illustration, but generally speaking it's a pretty tight consolidation zone like here. Then when it breaks out of the consolidation in the direction of the trend, you can verify the trade entry with price alerts and Forex Heatmap. Now this is a bull flag with a retracement. So instead of going sideways, the currency pair moves up. It's be in an uptrend, then it retraces, and then it continues in its upcycle. A more pronounced view of this would be something that's called increasing tops and bottoms. So the overall trend on this pair is up, but it keeps cycling against the trend and building these relative lows, but it's got increasing tops and bottoms. So here's your entry points here, 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 and trading in the direction of the trend. Increasing tops and bottoms, decreasing tops and bottoms for downtrend. The larger time frames are in a downtrend, the smaller time frames are giving you entry points off of these hard retracement points. So entry points for sells would be at the relative low when it starts to drop again. So this would be a relative high on the downtrend. Now another chart pattern is just the market is choppy. It happens when the market doesn't have any trend or direction. So this is a daily time frame. So look, each individual daily time frame range bar, this pair is a mess. It's just a choppy market. You can either avoid trading the choppy market, or you would be trading substantially less lots than you would in a clear trending market. To learn more about trading a choppy Forex market, you can click right there, and we have a separate lesson just on trading choppy markets. This is for choppy trends, choppy markets. Another behavior of currency pairs is oscillating or ranging. So you can see this pair is ranging up and down between support and resistance. This is your D1 time frame. So when you see the moving averages, simple moving averages that we can get set up. The instructions are on our website. As soon as you see a fresh trend starting, you're looking to buy. This would be the pound yen. And you can see it makes a double bottom here. We'll look at double bottoms here in a second, which is a confirmation on a reversal. So if you look right here, you're looking at a potential entry point. You could go straight back to the Forex Heatmap and start looking for a trade entry point, British pound strength or yen weakness or both, to verify a trade entry. And look at this, from here to here, you're talking about 700 pips. So oscillations happen in ranges, and if the ranges are wide on a bigger time frame, you want to consider trading them. More information about range trading, just click on that link right there to our range trading lesson, another illustrated lesson. You also have triangle patterns. So you have in this case, a bullish ascending triangle, increasing bottoms and steady tops. When it breaks the top of the resistance, remember, you can set an audible price alert here, and then once again check the Forex heat map on this particular pair to verify the trade in the direction of the trend. You can also have a bearish descending triangle. This is a symmetrical pattern. Once again, this is a live chart. This is not an illustration. This is the US dollar yen, and this is a big time frame. This is the weekly time frame. So each vertical bar is 1 week. And so this is a symmetrical triangle building an apex. And as soon as the yellow lines intersect and you find the apex on this chart, it's either going to break to the upside or break to the downside and form a new trend. And once again, you can check with price alerts in the Forex heat map to check the direction of the new trend. This is a weekly time frame, so you're going to have to wait on this one to develop. You'll be waiting days and days for once it reaches the apex, for it to break in a new solid direction. So these are your triangles, ascending, descending triangles, and symmetrical triangles. A head and shoulders chart pattern, another common chart pattern. Currency pair makes a move, builds a head and shoulders formation, and when it breaks this support, the neckline here, with two decreasing tops. This is, you should confirm your trade entry right here with the Forex heat map, or set a price alert right here, and when it breaks the downside, check the Forex heat map, regardless of the pair, or the base currency to be weak or the cross currency to be strong, and you have a verified trade entry just using a head and shoulders chart, audible price alerts, and the Forex heat map. You're building a trading system right off the chart patterns. So in this case, the falling wedge, the overall trend on the large time frames is up. The small time frames build the falling wedge. Right when it breaks through the blue line, this is your continuation. Once again, it would be difficult to set a price alert here. You might be able to, but you can certainly verify this buy with the Forex heat map. Now let's talk about some reversal patterns, double tops and double bottoms. So if you have a currency, the pair that makes a strong move to the upside for a long period of time, and it makes a double top, that's an indicator of a failure. Okay, and a reversal. So let's look at another live example. This would be a double bottom in this case. This is the Swiss franc yen. Once again, this is the W1 time frame. This pair makes a long move to the downside for months. Then it makes a double bottom. This is very pronounced. What you can do, and it sets up this cluster, support cluster here down here, resistance cluster. You can set an audible price alert right here, and when it breaks through to the upside, once again you can check the Forex heat map. You'd be looking for Swiss yen strength or Japanese yen weakness, or both on the Forex heat map, our live indicator for verifying trade entries. And all of a sudden you have the double bottom, the audible price alert, and the Forex heat map verifying your trade. Plus you can even verify the trend with our simple trend indicators. So if you want to find these chart patterns week after week, all you have to do is set up our trend indicators, our red and green simple exponential moving averages, and conduct your multiple time frame analysis every day, and you'll start seeing these chart patterns. These are very common, they occur regularly, and you'll be able to start analyzing the Forex using chart patterns, the trend, audible price alerts, and the Forex heat map for your trade entries. So this is Forex chart patterns, commonly seen chart patterns in the Forex market, and this is part of our 35 lessons from forexearlywarning.com.